We came out of the Fed changing policy in 2021 and starting to hike rates aggressively. And so you would think hard assets like crypto and gold would go down, and they did. What accelerated that was all the fraud and bad behavior in the space. And so you had FTX and Celsius and just an embarrassment of bad participants. And so crypto is built on trust, and we lost a lot of trust. And so you had what's a classic market capitulation. Everybody hated it. You couldn't sell enough. Everyone deleveraged. No one's ever going to touch it again. And so when there's complete blood on the streets in markets, it's when you're supposed to come in and buy. It's very scary. You might look like an idiot, but that's when the greatest buying opportunities were. So Bitcoin at 18, 17,000, with hindsight was a great buying opportunity. So what switched? How do we go from all those headwinds to tailwinds?
Welcome back to Money 101. In 2021, with the Federal Reserve implementing aggressive rate hikes, the prevailing wisdom foresaw a decline in the fortunes of tangible assets such as cryptocurrencies and gold. Indeed, these assets faced setbacks compounded by a string of unfortunate frauds and scandals within the industry, eroding trust significantly. FTX and Celsius, once notable names, became synonymous with the risks inherent in the crypto realm, culminating in a market capitulation where sentiment hit rock bottom. However, as Novogratz emphasizes, it is precisely in these moments of despair that opportunities begin to take root. Despite the prevailing fear and widespread reluctance, those who ventured to invest in Bitcoin at its lowest point experienced substantial gains. This narrative lays the foundation for a noteworthy turnaround, propelled by both macroeconomic shifts and strategic victories within the crypto sector. Before we explore the elements driving this recovery, make sure to hit the subscribe button and offer a like if you find this analysis insightful.
First, the Fed got closer to finishing their rate hike cycle, right? They're hiking. They're not going to hike forever. And so you can sense and then see the pause, and now we're going to start the rate cutting cycle. And so that was the macro tailwind. You had a weird combination of good things happen, right? Grayscale, which was this big closed-end fund full of Bitcoin, sued the SEC and said, this is unfair, you won't let an ETF happen. And they won. The reason we have an ETF is not because Gary Gensler decided, I really love crypto now, or the Biden administration, is because they lost in the courts. We have three parts of government, and thank God for the courts in terms of the crypto industry. And so all of a sudden we're going to get an ETF. Larry Fink, one of the most influential asset managers in history, came out and said, hey, this thing called Bitcoin, I know I used to think it didn't serve a purpose, but it's pretty important. And so the fact that Larry Fink got orange-pilled, monstrously important, right? Because it represented institutional investors everywhere. There are lots of different players, but he holds a unique post as the head of the largest asset manager in the world. And all of a sudden, crypto's always been about a macro story and adoption. You could start sensing, adoption is going to come. And so people start front-running that. We also cleared up Binance, right? The biggest crypto exchange in the world is Binance. There were all this worry, is the money there? CZ settled with the government for some KYC fines, paid a huge fine, and stepped down. And so the risk around Binance, the biggest player, went from here to here, right? So now it's an exchange. It's still the largest exchange, but no one thinks, it's going to get shut down in a week. No one thinks they don't have the money. It's just an offshore player. And so we took a lot of the tail risks away and put a tailwind together. And now you got a position where what's left to really get us going? Well, the U.S. still is in a stalemate on regulation, but the optimism is there's 11 months left to an election. And no matter who wins, Democrats or Republicans, Gary Gensler is not going to be the SEC chair. You are going to get some legislation. You're going to get movement. And when I go to D.C., there is bipartisan agreement on, two pieces of legislation. It's being blocked by Elizabeth Warren and Gary Gensler and a few other players, but that will change. And so when I look at crypto now, when I look at the whole industry, I'm like, we're going to get regulation in the next 12 to 18 months. We're going to have the Fed cutting rates, and we've got this new vehicle of adoption that is just getting started, right? The ETF is 2 weeks old. Usually ETFs get announced and they don't start trading for 6 to 7 weeks. So they give the sales forces a ton of time to be able to go make their phone calls. In this case, because of the grayscale thing, they had 1 day. And so if you're the Invesco sales force, you haven't even started making your calls, or BlackRock, or now we've got 9 big sales forces, huge sales forces that are selling Bitcoin. And that's a big, big deal.
And that's on the back of a very strong year for Bitcoin, right? Like we talked about, I think up, over 150%. And part of that really is, for those that don't know, is about that limited circulation, right? I think like over 70% of the supply was not changing hands. Yeah. Why is that?
So Satoshi Nakamoto, when she wrote her paper, she was really writing it as a response to what she saw, or they saw. I'm going to be really...
Do you know something you don't know?
I just like to make Satoshi female. It just makes me feel better. That populism was coming, right? The white paper really is the guard of populism. And what we have seen since is the 2 most populist presidents of the last 40 years, right? Donald Trump and then Joe Biden, right? Trump increased government spending a staggering amount before COVID and then blew the doors off. And Biden has just said, hey, my turn now. And so we have normalized spending 25% of GDP on the federal government. I worked at the Office of Management and Budget in 1984, to tell you how old I am. And I was working for the David Stockman administration, the Reagan administration. David Stockman was the head of the OMB. And I learned, hey, this is the rules. The feds get to spend 20% and try to tax 20%. And they usually tax less than 20%. And so our budget deficit is usually because we tax 16 and we spend 20. And that's Republican administration, Democratic administration. The only time we balanced the budget was 1999 with Bill Clinton, because we had those tech receipts and we got there briefly, right? But that's the framework we've used. And all of a sudden, Donald Trump, Joe Biden, voila, we're at 25%. Look at next year's budget projection, it's 26%. And we're not even taxing 18. So we have this giant deficit that's being funded. We have a fiscal crisis in this country that is not going away. And when I go to DC, they're doing nothing about it. Like you say, we need a Simpson-Bowles bill. For the guys old enough to remember Simpson-Bowles, it was a balanced budget. How do we get the budget back in check? It's not on the agenda.
Why do you think that is? Why is it not on the agenda?
You know, we went through this period of low rates where it felt like money could grow on trees. And, right, modern monetary theory, Elizabeth Warren, money grows on trees. There are still plenty of people that think this works. And it felt like it did work, right? We had low interest rates and low inflation for a long period of time. What people forget is when you have inflation like we had the last 3 years, the just devastation it does to most people in the country. In 2010, the average house in America cost $189,000. 2010 was like a 3-iron away from here. We're now 2024, and the average house costs $400,000.
Wow.
We've doubled the price of the average house in America in like 12 years. That is staggering. So if you're a young kid coming out of college, you're like, shit. Because they didn't double the salaries, right? Goldman didn't go from paying their analysts $140,000 to $280,000, let alone, you know, blue collar jobs or normal white collar jobs, right? And so this inflation of assets, the inflation of goods, crushes America. And it's why we have more populism now. It's why Donald Trump still gets 38% of the vote every single poll, because that group of people feel like nothing's working for me, and screw you people in DC. And so we're in this cycle. I don't know what gets out. When I say Hail Marys at night, the one potential salvation is that AI is just so transformative that it becomes the greatest productivity boost in modern history. And we have such a productivity boost that inflation stays low and we can continue to run these giant deficits because they don't cost anything.
Yeah.
I think that's a very narrow target. I think AI is going to have a big impact, but I think that it can just show up everywhere in time is a low probability.
Embarking on our exploration of the complex narrative within the realm of cryptocurrencies, we find ourselves at a pivotal moment where the future teeters on the edge, molded by regulatory choices, economic strategies, and technological progress. Novogratz's observations regarding the fiscal challenges confronting the United States bring to light the larger economic backdrop against which the crypto market unfolds. A comparison between historical and contemporary fiscal policies reveals a profound shift, with government spending reaching unprecedented heights. While this fiscal largesse may have appeared sustainable amid low interest rates and inflation, it now presents notable risks, evident in the soaring cost of living and the widening wealth disparity. Looking ahead, the potential transformative impact of AI emerges as a beacon of optimism. Its ability to enhance productivity could hold the key to mitigating inflationary pressures and sustaining economic expansion, albeit with uncertainties along the way. In conclusion, the crypto market finds itself at a crossroads, its destiny intertwined with overarching economic policies, regulatory frameworks, and technological advancements. As we stay vigilant in monitoring these unfolding developments, rely on Unscripted Crypto as your dependable source for insightful analyses and updates.